So today we're looking at a question that will help us understand how to prepare income statement for the football club. Your Arsenal, your Manchester United, your Manchester City, your Enyimba, that sort of arrangement. So the question we got it from ICANN examination for foundation, May 2014. So for a class, that covers this topic, you can visit jadusconsulting.com to take the classes. So basically, what you have here, is a business model that we are reporting, in form of a question. But the topics that cover such model, we have them on jadusconsulting.com. So you can go there and then take your class. We have over 130 topical classes, and they are all free. Just click on the categories, click on financial accounting, select your topic, proceed to the course, and press play, and that's it. You have your class free of charge. But then you can as well donate to support the course, because we're still counting. We'll keep recording and keep putting them for you for free. And then you can as well get my textbook. It's 7,000 naira per copy, or 12 US dollars, excuse me. Or you can as well sponsor copies. You pay, and then we give to students for free. That's 6,500 naira, or 11.5 USD. So let's quickly take the question here. We have question 3. ICANN Foundation Examination, May 2014. The following the information below relates to ABC Football Club in respect of the year ended 31st October 2013. So we have rent and rates, stadium repairs and maintenance, match takings, state government grants and aid, wages and salaries, payment of match bonus, transfer fees of players who left the club, match expenses, transfer fees of new players, board, fines and penalties paid to NFF, cash and bank balance at the beginning of the period, sales proceeds of memorabilia, prize money for winning FA Cup, motor running expenses, donations received, administration expenses, printing and stationaries, communication, honorarium. So those are the items from their ledger balances I get. And then we have the following information is also relevant. Insurance premium owing is 500,000. Then 2, the club is currently facing NFF disciplinary committee investigation for players and fans misconduct in respect of week 25 match between ABC and Kwara United. The club lawyers have stated in their last letter that it was highly probable that the club would be found liable, and based on past experience and the information gathered so far, the club should be fined up to 2 million naira among other punishments. Then 3, depreciation has been accurately calculated at 150,000 naira in respect of the accounting period. 4, other match takings not yet remitted by the club's agent amounting to 2,600,000. You are required to prepare the club statement of income and expenditure in vertical format for the year ended 31st October 2013. Now that is the question. And then what I see there is a business of what? A football club or a football organization. Now let's have a little bit of a background. So the truth of the matter is that a football club is also what? A business, but it can operate under any form or any type of business. It can operate as what we call sole proprietorship. It can operate as partnership. It can operate as what? Limited liability company. Either private or what? Public. It can operate as what? As a non-profit organization. So it can operate under any of these scenario. But whichever way or whichever model it's operating, you understand that we already have accounting for sole proprietorship, which is called one-man business. We have accounting for partnership. We have accounting for companies. We have accounting for what? Non-profit making organization. So what you can do to help you understand what we're doing here is to take your classes on all this. So it means that if the business is operating as sole proprietorship, you report it as sole proprietorship. If it's operating as partnership, report it as partnership. If it's operating as what? As public or private company, report it as public or private. If you're operating as non-profit, you report it as non-profit organization. But the truth of the matter, or the fact remains that, okay, it also goes in line with your normal what bookkeeping procedures and your what double entry what principles, and then with all relevant what standards, accounting standards, principles, concepts, and conventions. Okay, and then we have what they call rules guiding the industry in which you are what operate. So you take all that into consideration. Okay, so that is it. But then you must understand that whether it's operating as any of this model, you must understand the business of football. So let's have a little bit understanding of how the business of football works. Okay, so that it will help us understand what we're doing here. Now, as a football club, you would agree with me that they have their product. If you're dealing in sugar, your product is sugar. If you're dealing in salt, your product is salt. You're dealing in what do you call it now? Shoes. Your product is shoes. You get the point? But for a football organization, what do they do? What is their product basically? Their product are the players. Okay? So if you have an Igalo or a Seyi Adebayo, Igalo, for instance, recent times moved from his Chinese club, although he was on loan with Manchester United, I guess, and then he left after the expiration of the contract, and then he went to a Saudi Arabia club. Okay, now he's a player. He's more like a product there, and then which is also an asset. So products are assets of business anyway. So the question is, how do they make money? How do they make money? So you must understand that what the players, they buy them into the club. That is more like purchases. Then after some period, the sponsor will then to also sell them to another what club. So when they buy, okay, that's more like transfer fees paid for bringing players into the what club. And then when they sell, okay, they have transfer fees received, okay, for sending players towards other clubs. So you must understand where the revenues are. And then aside from that, what they do, they sell players, they buy players. Okay, now if they sell players and buy players, it also means that what they can as well sell other things, maybe jerseys. Okay, they can sell jerseys to make money. They also sell matches in form of what? Match revenue or match takings. They want to play football on a particular day. What happens? People pay for tickets. They come in to watch live football. They make money there. They can rent out their stadiums if they have one. Okay, they can have money from what? Sponsorship. They can have money from donations. So these are areas where they can as well generate what? Income. So you must understand, okay, the areas where a football club can generate what? Income. But their basic attention here is on the players. They buy, they sell, okay, and then some other inventories that are related to what they do. So you must understand how money is what made, and then other things. They pay salaries as expenses. They make repairs. You know, they do transportations. You know, maybe they have to move from one particular location to another location. They pay transport and all that. You understand? So you have to understand that it's a normal business model, but you must know exactly where the money is being made, and which is what I've explained from the players. Okay, when you buy players, that's payment, that's purchases. When you sell, that's more like what? Sales. Okay, then when you sell your match tickets, that's revenue. Do you understand me? When you sell jerseys, that's revenue. When you get donations from government or from individuals, that is revenue. You see, so you must be able to understand those aspects to know exactly how the business operates. So let's, with that basic background, let us use that to what? Quickly prepare what is required. So we've been asked to prepare what? The club's income, statement of income and expenditure account in a vertical format. So let us quickly do that. So what do we have? It's what we call ABC Football Club. Okay, ABC Football club. Okay, so we have to prepare statements of what? Income and expenditure for the year ended at the 1st October 2013. So we already understand at this level how to prepare our what? Income and expenditure account. So you can look at that class on jadosconsulting.com, to be familiar with it in various aspects. There are sole proprietorship, partnership, companies, and then non-profit making organizations. So you can go there. So let's proceed. This is the vertical form, like how do we do? We're gonna have notes, and then we have the amount. So the first thing, as usual, turn over. So let's call that note 1. So how do we get our turnover? Okay, so let's say note 1. Okay, turn over. Okay, so what and what is going to make up our turnover? So let's look at the question. So we have rent and rates. Rent and rates is an expense. At this level, you must know what means an expense, what means an income. So if you have issues, go and check out our classes on what double entry and income, double entry and expenses, double entry and asset, double entry and liability. They are all there on jadosconsulting.com for free. So we have rent. Rent is an expense. Stadium repairs and maintenance, that's an expense. Match takings. What's match takings? That's like your match day revenue. If you want to play a match and then you bring guys into field to play, and then you sell tickets. People pay, come in and sit to watch. So we have match takings there. So let's take match. Okay, match takings. Okay, so it's a million. So let's know what we're taking there. Match takings 20 million. Okay, but then we have to be sure. Is there any information? Any additional information relating to that? So we'll go down there. Okay, I can see that note 4, other match takings not yet remitted by the club's agent amounted to what? 2,600,000. So match takings there, we have 20 million. And then we have what we call accrued income. Remember your accruals. You can go to jadosconsulting.com to take your class on accruals. Accruals can be accrued incomes or accrued expenses. Accrued expenses are expenses that you have incurred but you're yet to pay as at the date of report, your time of reporting. Accrued incomes are income that you have earned but you're yet to receive as at the date of reporting. Okay, so you can go to jadosconsulting.com to take your classes on accrual. So here we say other match takings not yet remitted. So that means that there are some agents that help you sell tickets, and then as at the date of reporting, you've earned 2.6, but they are yet to give it to you. So that's accrual. So we'll add it. That's plus 2,600, right? Good. So what do we have? 20,000 plus 2,600. Okay. So we have 20,000 plus 2,600. That's 22,600. We have 22,600. So the next item there. What's the next item there? The next item there, we have state government grants and aid. Okay, so that's more like other incomes. We have wages and salaries, an expense. Payment of match bonus, an expense. Transfer fees for players who left the club. Okay, so if players leave the club, that means they are going to other clubs, and that other club pays this our club. Okay, for what? For the player. So that's more like selling the players. Okay, so that's turnover. So transfer fees. So we can say transfer fees. So how much do we have there? We have 12 million. So we check, is there any information regarding that? Any additional information? Any additional information? No. So we're taking it straight. to be what? 12 million. So what's the other one there? What are the basic turnover of the business? So we have match expense, that's an expense. Transfer fees for new players bought, that's purchases. Fines and penalties paid to NFF, that's 3,000, that's an expense. Cash and bank balance at the end of the period, that's an asset. Sales proceed of memorabilia, you see, that's even open, so that's sales. Okay, so we have sales of memorabilia. How much that? That is 900,000. So we pick 900. So the next one there, prize money for winning FA Cup. You see, that's more like other incomes. Okay, you know when you play competitions, you get the prize money. Okay, so that's another income for the business. So we have motor running expenses. That is an expense. Donation received, other incomes. Administrative expenses, expense. Printing and stationery expense. Communication expense. Honorarium expense. So we've taken the basic items of what? Turnover. So what do we do? Let's add up. So what do we have there? What do we have there? We have 22,600 plus 12,000 plus what? 900. So we have 35,500. So your turnover is what? The turnover is 35,500. And that's 35,500,000. So that's it for turnover. So the next note there, we say what? Cost of what? Sales. What you call, okay? So cost of sales, they all call cost of goods sold, you know. Just pick those items. So let's come here. Let's call it note 2, okay? So we'll say what? Cost of what? Sales, okay? So what do we have? So what are the items of costs there? Okay, rent and rates and expense, stadium repairs and expense, match takings and revenue, taking that, state government grant, other income, we have to come there. Wages and salaries and expense, payment of match bonus. You see, it's an expense. Transfer fee for players who left. When players leave the club, what happens? You get money, so that's an income. More like turnover. So the sold players, they will be taking that. Match expense is an expense. Transfer fee for players, new players that we bought. Okay, that's more like purchases there. So we'll say transfer what? Fees for new players bought. What do you have there? 8 million. So is there any information on that? Any additional information? No additional information. So we say what? 8 million. So what's the next purchase item there? Okay. Fines and penalties and expense. Cash and bank balance is an asset. Sales proceeds, taking that. Prize money, other income. Motor running expense, donation received, other income. Advertising expense, printing and stationery, communication and honor. So that's it. So your cost of sales here basically is 8,000. So cost of sales here is what? 8,000. So when we take that out, what we have 0 here is 0, 0. 5 minus 0 is 5. 15 minus 8. That's what? Okay. So what do we have there now? 2. Let's check again. 0 minus 0, 0, 0 minus 0. 5 minus 0 is 5. 15 minus 8 is 7. Remember 2, 2 minus 0 is 2. So this is called your gross what? Profit. So we now have what we call other income. So you can call that note what? 3. Okay. So let's call that note 3. You can put that here. So we have note what? 3. Let's call it what? Other incomes. So other incomes made by the club. So what are the other incomes there? Okay. State government grant and aid. So we have grant and what? Aids. Any additional information on that? No. So we take it directly. How much is that? 25 million. So we have 25,000. That's the million out there. So the next, any other income there. Wages and salaries and expense, payment of match bonus and expense, transfer fees of players who left the club, match expense, transfer to new players, fines, prize money for winning FA Cup. So we have prize money. How much is prize money for the FA Cup? 3,500,000. So we have 3,500,000. Okay. So what else do we have there? Motor and expense. Donations received. We have donations received. So no additional information on that. So we have how much is that? 9.5 million. So we have 9,500. 9,500. So any other income there? No. So the total. What do we have there? We have 25,000 plus 3,500 plus 9,500. So what do we have there? This is 38,000. So basically, our other income here is what? 38,000. So if you add we have 65,500. So this is your what? Your gross what? Income. So what do we do now? We take out our total what? Admin and what? Selling expense. Okay. So let's call that note what? 4. So we'll say note 4. Okay. Admin and selling what? Expense. So what do? We pick up all those other expenses. So what's the first thing there? I can see rent and rates. So we have rents and what? Rates. Any information on rent and rates? Any information on rent and rates? I can't find any. Okay. So how much is that? 2.5 million. So we have 2,500. What's the next one there? Stadium repairs and maintenance. So we have stadium what? Repairs. Any information? No information. We have 4,500. What's the next one there? Match takings. We've already taken that as a revenue. State government grant, taking that other income. Wages and salaries. Any information on that? No. So what do we have? 15 million. That's 15,000. What's the next one? Payment of match bonus. Any information on that? No. So match bonus. How much is that? 5,000. So we have 5,000. Okay. Transfer fees of players who left the club. That's revenue or turnover. I've taken that already. Match expense. So we have match expense. How much is that? 3,500. Any information on that? No. So what's the next one there? Transfer fee for new players, but that's purchases. We've taken that already as cost of sales. Then the next one, fines and penalties paid to NFF, 3,000. So we have fines. Okay. Now, is there information there? Yes. I can see number 2. The club is currently facing NFF disciplinary committee investigation for players and fans misconduct in respect to week 25 match between ABC and Kwara United. The club lawyers have stated in their last letter that it was highly probable that the club would be found liable, and based on past experience and information gathered so far, the club could be fined up to 2 million among other punishments. Now, there's something called International Accounting Standard, or rather, there's something called provisions and contingencies. That's provisions, contingent liabilities, and contingent assets. That is International Accounting Standard 37. Okay, recognition of provisions. Okay, now what IAS 37 recommends is that, okay, it talked about events that will result into economic outflow, okay, and then put the business into, what they call an obligation of a liability in that sense, okay, but then we must be certain that the amount of obligation that is causing or that will result into the economic outflow is certain or can be reasonably estimated, okay, as at the reporting period. Now, if we go by IAS 37 provisions, contingent asset and contingent liabilities, and then recognition of provisions, we understand here that the fines, okay, have not been paid, but there's an obligation. And then the lawyers are saying that it is highly probable, based on experience, that's past events, that the company or the club will pay the fine of 2 million. So we can ascertain the amount based on what IAS 37, recognition of what? Of provisions, initial recognition of provision, or measurement of what? Provisions. We can identify the amount, and this is happening at the date of what? Reporting. So going by IAS 37, okay, recognition of provisions, okay, this falls within what? The ambience of what should be captured in the what? In the record, because it is happening, and then putting the business in obligation form of economic outflow, and then we can as well, give the amount of that what? Commitment, or of that liability as at the what? As at the reporting what? Period. Now that's more like what we call provision for what? Expense. Remember provision for expense. Go to jadosconsulting.com to take your class on provision for what? Expenses. So where provisions increase, what happens? It results into an expense. If it decreases, it results into what? An income item. So in this case, we have fines. Fines in the question here. Fines in the question here is what? 3,000. So we have 3,000. Okay. And then we now have provision for what? Fines and what? Penalties. So we were able to ascertain that what? The fine will be paid. And that's how much? 2 million. So let's account for that. 2 million. So the next one there, depreciation has been accurately calculated at what? 150,000. So what we have? We have depreciation to do what? 150,000. Then we have insurance premium owing, accruals. You can go to Jados Consulting to take that. How much is that? 500,000. Then have we taken all the items in the ledger balances? Okay, we've taken fines, cash balance and assets, sales price, we've taken our price, we've taken our motor running expense. Motor running expense. So how much is that? 500,000. So we have 500. So what's the next one? Admin expense. How much admin expense there? 2 million. That's 2,000. What's the next one? Communication. Let's continue here. Communication there, 600,000. Then we now have what? Honorarium. Honorarium there is how much? 200,000. So let's check. Have we picked all the items? We've taken rents, We've taken rent and rates. Stadium repairs, we've taken that. What else? Wage and salary, we've taken that. Payment of match bonus, we've taken that. Transfer fees of players, we've taken that. Match expense, we've taken match expense. Okay. New players, we've taken that. Fines and penalties, we've taken that, including the provisions based on IAS 37. And then what else? Sales proceeds, we've taken that. Prize money for winning FA Cup, we've taken that. Donations, we've taken that. Grants and aid, we've taken that. Admin expense, we've taken that. Okay. Printing and stationaries, have we taken printing and stationaries? We took admin. Okay. Printing and stationaries, we didn't take that. So let's go. Printing and what? Stationaries. So what do you have there? 400,000. So what else? We've taken communication, we've taken honorarium. So that's about it. And then additional information, we've taken insurance premium, we've taken depreciation, and then that's it. So let's add up our total expense now. What do we have there? 2,500 plus 4,500 plus 15,000 plus 5,000 plus 3,500 plus 3,000 plus 2,000 plus, excuse me, okay, plus the percent as 150 plus 500 plus 500 again plus 2,000 plus 600 plus 200, okay, plus 400. So we have 39,850. 39,850. So this is your total what expense. So we'll come here, we'll say what? 39,850. So we take that out. What do we have? 65,500 minus 39. We have 25,650. 25,650. So this it will be based on the type of business. If it is your normal profit-making organization, profit organization is either your partnership, sole proprietorship, company. So that means you're going to have what? Net profits, okay, or what? Loss. But if it is a non-for-profit making organization, you're going to have surplus or what? Deficit. So what we're saying is that if the business is operating as what? A profit-making organization, so this would be profit. Profit is where your income is more than your expenses. But if your expense is more than your income, it becomes a loss. That's why it is in bracketed. But if it's a non-for-profit making organization, it will be surplus. Surplus is where your income is more than your what? Expenses. But deficit is when your expense is more than your what? Income. So that is it based on the question. So basically, in this class, we've been able to look at how to prepare income statements or comprehensive income statement for a football club. Okay, so if we've given you some knowledge and then you feel that that is okay, you can support the course by your free will donations. Pay into the accounts displayed on the screen. You can reach me on the number displayed for questions and clarifications, or drop questions in the comment section. I'll be there to reply with the right answers. You can sponsor my textbook so I can give to students for free. You can order copies for yourself as well. Okay, thank you.